Guys, and welcome to Tanks Invest. We're talking about investing, finance, and professional development. For today's video, 8 attempts only. The investment we're talking about today will be NIO, ticker NIO. So it's been a while since I last covered equity in comparisons to cryptocurrency. So I want to quickly come back into the equity side to talk a little bit about my biggest holding that I have with respect to NIO stock. And NIO, currently I'm holding about 7,500 shares at the moment. And with respect to what's currently trading at today, it's up about 5.40%, trading around like the $47, $46 level. So it's definitely a relatively green positive day for me. And with respect to the technical analysis, what I'm going to go through would be what have been driving these catalysts on driving this pump of the stock specifically on both a macro perspective, also a micro perspective. I'm also to give you guys my resistance level to look out for in case you want a dollar cost average or building a position for the first time, and my price target for year in 2021 as well. So stay tuned, stick around, let's make some money. Right, so moving on to the technical analysis, let's just do the recap real quick since I haven't done NIO in such a long time. You can see that ever since last year, we had that huge rally on the sector rotation to the EV sector, also driven by the Tesla stock split 5-1. Also, with respect to the inclusion of S&P 500, the green energy from Joe Biden, the Chinese evolutions for the green EV vehicle evolution as well. So all of those positive media affectation, I named like 5 so far, drove the stock up, from originally trading around like the $12 level, which was kind of trading on a consolidated sideways fashion, to the $67 level, right? And ever since then, with respect to the sector rotation back into the recovery stocks, and also with respect to these chip shortage that we've been experiencing across the whole EV sector, but also into technological semiconducting sector, that subsequently drove that off, right? And also on top of that, whatever goes up really, really fast comes down really fast. And also on top of that, Q1 or sometimes half of Q2 was tax season, right? So people were basically reallocating their cash balance to subsequently pay for the tax that they have incurred last year, right? That subsequently drove some sell off. And also on top of that, just a lot of negative media affectations around, is the EV stock being too pumped up? That is, we are maybe too foreshadowing a little bit too precautiously or too prematurely, that we need to be basically dialing back down a little bit, and subsequently drove some negative pressure, right? And also on top of that, you could see that we have oscillated for quite some time now. And these oscillations is mainly driven by the monthly CPI report that we've been getting from the Federal Reserve on indicating the foreshadow of the outlook of the economy going forward, right? And as of the most recent CPI report, and also with the FOMC meeting we had yesterday, it drove a lot of positive media affectation and drove a lot of positive pressure on, basically indicating to investors like you and I that the economy is slowly coming back up, that we are slowly gonna be mitigating the COVID effects that we've had before. That despite the CPI report, relatively leaning more towards the inflation emphasis, despite the price point increasing, but at the same time, purchasing power hasn't really been diminished despite the increase in price point. That subsequently drove some good indicator across the investment community, which is aka the hedge funds and institutional investors. And then also with respect to NIO, why is driving and sustaining these levels that we broke through like these 1, 2, 3, 4, 5 walls so far, and we broke through the 5th wall today, is really driven by another 2 major catalysts, right? One is that last Friday, from the management team, they have announced that they have secured the European whole vehicle type approval license, contracting with the European nations to have their ES8 vehicle, which is an SUV vehicle, to officially launch the model in Norway and into the European market at large, right? Which is one of the first milestone for the European expansions going forward, which is a green market with a lot of untapped potential going forward, which subsequently will drive a lot of positive sales that that are unadjusted in the financial analysis and the projections going forward, which is good for us investor. With that adjustment, will obviously drive some positive pressure. On top of that, with respect to another recent news that we got, I would say a couple of days ago, William Li, the CEO of NIO, has announced that with respect to the construction of the second factory that they're thinking about building, is expected to start manufacturing in the 3rd quarter of 2022. So that's something that is confirmed. They have already allocated a budget for it in a capex perspective and also an opex perspective. So that's something that's in play, which indicate and foreshadows that they are hedging against the human capital growth, obviously to sustain with respect to manufacturing growth and the production growth going forward, which just means that the company is expanding in a global perspective, and we are all trending in great directions. And as of yesterday, with respect to the FOMC meeting, another positive great catalyst that subsequently allow us to push through these five walls that we've been basically trying to bump our head against for such a long time now would be, the indicator of the inflations and with respect to the quantitative tightening plan that they were foreshadowing, or the tapering that they were talking about, right? Seems like that Jerome Powell, based on this depiction around the quantitative tightening, we are not going to be doing that anytime soon at the moment, because of the fact that we want to sustain the job market, we want to sustain the corporate growth outlook going forward. Those are the prioritization that the company and the country has at the moment. So we do not want to be pumping the brake by stop with the purchasing of the mortgage-backed security to sustain our economy going forward. So it means that the quantitative easing is still going to be in play. However, in the short-term perspective, it's positive. But on a long-term perspective, with respect to quantitative easing, it means that we're going to continue to print more and more currencies, more money in circulations into the U.S. market, and globally speaking, that the currency will subsequently depreciate over time, which will subsequently, in a long-term perspective, weaken our economy as a whole, right? But with respect to this positive catalyst in a short-term perspective, definitely pumped up another green catalyst for NIO stock as a whole, knowing the fact that all three catalysts have been positive. Also, on top of the fact we have sold off so significantly ever since that $67 mark, that on the technical perspective, we've been highly oversold in all levels already. That the rebound was basically due, and this is something that I mentioned in my previous videos, that the rebound is already happening, and this has been happening ever since on May 13th, and we've been kind of rallying ever since. So what's going to happen going forward, right? I think because of the fact that we broke through like five walls right now, it's definitely extremely bullish in terms of the reversal, and I think this is a very logical reversal. I think the media affectation might be a little bit too overreacted, to be honest with you, that probably has some manipulations coming from the institutional investor side. That the media affectation or the publication is something that we need to question all the time, because like we need to understand the incentive behind who is backing that publication company, why they're publishing certain articles on certain timing, on certain dates to manipulate or influence the market so they could get into a certain price point to either buy or either sell, right? And I think in the recent time, because of these three catalysts that have been happening consecutively, with one major macro, catalyst that happened yesterday with respect to the FOMC meeting, it's just basically like a nail in the head, right? On just basically having three confirmatory news with one substantive confirmatory news that substantially sustain the growth that we've had right now, right? However, in the technical perspective, based on what we see right now, we're trading around like the $47, $45 level. And if we look at that historically, we're basically consolidating, not really consolidating. I think we still have a little bit more room to run to all the way to somewhere around like the 48.30, which is a level that we should be expecting to fall back down, knowing the fact that the MACD is, it's been crossed up for quite some time now, that it's just bound to happen to go down. And also on the RSI, you could see how overbought we are right now, which makes sense. You could see the mega, escalator that we've been having for such a long time with this mega green candle we have here. So I think I do foresee us to maybe run a little bit more to like the 48.30, possibly. Yeah, I think so, 40.30, or possibly even to the 49.50, not 58. But I don't foresee us to breaking 50 anytime soon, based on how the trend is setting up right now, because we are overbought on all levels at the moment. That it needs to go through the course of cadence, right? Like you could see that we were going green, green, up and away, but we were not going up in the green all the way sideways fashion, right? Like the way that Ethereum or like Bitcoin has been trading historically ever since that pump, right? You see some consolidation. That means that people are, cautious about the recovery, cautious about the reversal that we're experiencing. So I foresee us to go to the 48.30 or possibly even the 49.50, not breaking the 50 anytime soon, and then come back down to retest this level at the 45, right? And then it's gonna go back up again, contingent on more positive media affectation, on the production level, on the global expansions, and obviously the major catalyst that we still waiting for the news, the chip shortage, which will basically confirm our long-term growth going forward, right? And by that time, with respect to the economy comes back up, we'll hear more about the inflation news, right? And I think those are the catalysts that we'll need to watch out for on a monthly basis, just to keep ourselves alert with respect to how we're trending on a consumer price index perspective, but also in a monetary perspective for our U.S. economy going forward, right? So those are the trade levels I would buy at right now. I would probably way off a little bit. I think you could probably miss the pump. You should have bought yesterday after the FOMC meeting, or you should have bought. Yeah, I would have bought like after the FOMC meeting because of the indicator that today was going to be a green day, and that's what's expected, right? And that's why you see the reversal on the, or not the reversal, the opposition in juxtaposition of the crypto side, which they anti-correlates, right? So hopefully this is helpful. And I think we will just go back down to like $45 momentarily. I think sometimes in later, I think by Monday or so. I think this is the catalyst is strong, but is I would say those are good catalysts, but two of them are foreshadow. One is a little bit kind of subpar because of the inflation that's baked into the adjustment as well. That's a lot of positive foreshadow news, but nothing really in terms of like current validation that will provide like a strong substance to consolidate these type levels of walls. But these walls are good because I don't think we're gonna go back to below 40 ever like for a while because we broke through these many walls. And for you to break down these many walls again, you have to go through that repeating negative news that we need to hear, right? But I don't foresee us to be hearing consecutive like five negative news going forward for us to get back to the below $35 level anytime soon, or below $40 level. To be honest with you, I think the like of staying around above $42 level at least, or about like $45 level would be very very likely going forward, knowing the fact that the substantiveness around the news and the technicals and the charts that we're seeing in front of you, very very strong stuff, very bullish signals that makes my price target even more into fruition going forward. So just to recap on all the numbers that we just talked about right now with respect to NEO, I think the really firm resistance level will be the $45 now. So that's a good sign because the reversal is definitely in play. Has been in play for a while now. And with respect to breaking through the five walls, I think we broke through the fifth resistance level today. That the $45 level is a very strong level, but we are kind of floating up in the air right now, contingent on if we're going to be reaching that $48.50 or $49.50 level. Then we can talk, right? But I think right now we're still kind of hovering in the air right now, in between two lines of resistance. That I feel more comfortable buying at the $45 level, right? I think if you knew about technical analysis after the FOMC meeting yesterday, you would have bought yesterday because yesterday was a great catalyst with a lot of good substance, and on top of that, more news that's been percolating on NEO just drives up a lot of green pressure around the board, right? With respect to 42, I don't foresee us to be going down there anytime soon. I think we will go to a 45, but if we had like negative news after we hit the 45, yeah, definitely we'll go back to the 42. And with respect to 40, I don't think we'll go back to 40 for a while because that would just completely destroy the chart completely in a logic perspective. Not at least in the next couple of weeks, right? I think because of the fact that with such positive news already, and for us to go to 40, you have to break through basically 3, 4 resistance levels to get back there. Um, and the 40, and basically the $42 levels are very hard, resistance levels to crack. So for us to get to 40 or below 40 would be just not the most logical at the moment based on what we see in front of us. So I would say the sweet spot is really at the $45 level or anything between the 45 or $42 level. With 40, I would just give that like a very unlikely possibility, right? Now, with respect to my price target, $85. With a 89% of an upside, you're buying at $45 level with almost a 2x your money from here, depending on what price point you buy at, right? And I would say that I'm still relatively conservative about the 85, knowing the fact that they've been growing, and with respect to adjustments in my model, I haven't really baked in the European expansions. So I think I need to probably adjust the model a little bit And I would say 85 is really conservative. I would say it's more on the lower case of the spectrum in comparison to more like the actual realistic case in the spectrum. So 105 would not be surprising if we get there by end of this year with this whole Santa Claus rally and the sector rotation that's coming, and also with respect to the chip shortage that will be subsiding going forward as we slowly come back to the economy. That's it for today. With respect to my updates on NIO stock and my technical analysis and insights, how it encapsulates into what we see in the foreshadow perspective. Hopefully that's helpful and gives you more clarity and transparencies around how we're going to be maneuvering these cycles going forward and what's the right proper trades that we should be making going forward. Please hit me up if you have any questions that you want me to address or any things that you want to just talk about. Happy to provide any guidance on that going forward. And please hit the like button, subscribe button, and also the bell notification. And watch out for things coming up. Take care.